It's about that time of day again. Back to work, back to work, back to work. Party's over. We got some work to do here tonight. It's about that time of day again here, folks. It's Tuesday evening. It's October the 8th, 2019. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, don't forget, guys, I help traders find high-quality setups using a very simple three-step trading strategy that we teach and trade together every morning in the trade room. But my job tonight's a little bit different. My job tonight is to help you guys identify the best levels of support and resistance, the best entry and exit setups, and most importantly, the most important traps to avoid in tomorrow's trading session. And we have a great video newsletter in store for you guys and gals tonight. First, we'll start off by checking the calendar. Got a bunch of news tomorrow, and that news tomorrow is going to tip us off into some big important things to keep in mind for tomorrow's session. Then we'll grab some charts. We get some oil, some S&P, Nasdaq, and we'll wrap up on the yellow metal, that mighty gold here in the lower right-hand corner. I'm going to jump into oil first tonight, the black gold, the Texas tea as they call it, because the oil went up, down, and now we're right back in that same range. Had a very busy news day for oil traders. Range-bound markets tell me one important rule, right? Let's grab that oil chart here. Enough talk, and let's look at this chart here tonight. What do we know about oil here? Right now, we know that oil tumbled all the way back down into that trading range, and I'm talking about that range all the way back from the beginning of this month of October, right? So we're back inside that range right now. Bears definitely have the momentum on their side at this point. You can easily see these bears have momentum on their side. I definitely would not call this a bullish market at all, but we're right back inside of that trading range. Range-bound markets tell me I want to buy low, I want to sell high while avoiding the middle of that trading range. Buying low, selling high, and in tonight's video, I'm going to talk about how we're going to use a combination of the momentum in the market along with what I call the 2-try rule. 1, 2, back up, 1, 2, back down. We'll talk about buying low, selling high, and what about breakouts? Tomorrow's a big news day on oil, right? A lot of stuff going on tonight that may come into play tomorrow, right? And that may lead to a breakout. We'll talk about, right? How can we qualify a breakout up or down? Where will those breakouts be trying to go? And the best ways, of course, to trade them. We're going to talk all those details tonight on this video. How about some S&P here? S&P, very similar to oil, but a little bit different. Bears definitely have the edge right now. Very difficult to call this a bull market. Now, we got some big news here this afternoon. My boy Jerome Powell, and we'll talk about how that news will likely impact us tomorrow. The market didn't exactly behave the way that we think it should have, and we'll talk more details on that here in the video tonight. But what do we know right now, right? Let's not speculate. What do we know right now? We know the market tumbles down on strength, spends a lot of time, right, sitting inside of a range here this morning, then tries to run up and basically ends up right back where we are right now. Very similar to oil in the sense that we are bearish overall and we are inside of a trading range. What I'll do now is combine the market's momentum along with that 2-try rule. 1 try, 2 try, 1 try, 2 try. We'll talk about how we can combine momentum and the 2-try rule to formulate a really good plan here of attack here to buy low and sell high tomorrow morning. Again, as I mentioned earlier though, right, big news tomorrow. We may see a breakout here. Breakout higher, breakout lower. We're going to talk about, first of all, how to qualify the breakout, right, because breakouts don't work very often, how to qualify the breakout, and we'll talk about the best way to trade that breakout in the video tonight. Nasdaq is very similar to the S&P, a very strong bear move down. Spent quite a bit of time here, you probably noticed today, right, in the morning session inside of that range, and of course, just like on the S&P. Overall bearish, We find ourselves, though, I wouldn't call that a breakout. And we'll talk about what a breakout looks like here later on in the video tonight. But I would say right now we are bearish. We are basically back inside that range. I'm going to combine that bearish momentum along with what I call the 2-try rule. 1, 2, sell back down, right? And of course, 1, 2, buy back up. Now remember, that momentum, right, that bearish momentum plays a very big role in how specifically we'll apply that 2-try rule. So if you're a Nasdaq trader, you definitely want to stay tuned on that Nasdaq. And of course, we'll talk about breakouts too, because I got some levels down here. Yeah, I see you all the way down there. I got some levels down there. We might just get a little bit crazy here tomorrow. So we'll take a look at that here in a moment here. And of course, last but not least tonight in the video, the mighty yellow metal, right? The gold futures. Now, of course, gold, as you can see here, is kind of the opposite of what we have right now on the E-minis, right? A bull move up into a trading range right here this morning, right? Buyers, of course, got their chance to buy with that 2-try rule, but now we're back right into that trading range. Now, at this point, same idea, right? I've got a bull bias now, that bullish momentum. What do ranges tell us? Buy low, sell high, avoid that middle, right? Don't fiddle with your middle, mama always says, right? We want to buy low, want to sell high, but what about a breakout? What about a breakout? How do we qualify a breakout, and how do we trade it, and where are they trying to go? I don't want to give away too much right in the video tonight, right? But we'll talk about how to qualify the breakout, how to trade the breakout, a couple breakout patterns for us here, right, on the gold. I've got some great levels here. I'm watching some great levels here right now. I'd like to be a buyer off these lows, sell off these highs, and we're going to break this down into all kinds of small details here for you guys on the video tonight. We got the yellow metal, we got the Nasdaq, the S&P, and of course the black gold, the Texas T here, ready to go here for the video tonight. I'm ready, you're ready. Before we jump into the video tonight though, I just want to remind you guys to make sure you join our mailing list. You know, you may not be aware of this, but I sent an email out to everybody on our mailing list just before I publish this video on our YouTube channel. I want to make sure that you get that email. That way you always know when that nightly newsletter goes live. All I need is your name, your email address. Hit that subscribe now button, and don't forget, guys, don't forget, when you hit that subscribe button, your job ain't over yet. You've got to go in and check your email inbox. I'm going to send you a welcome email with a verification link, and don't forget, sometimes that email gets stuck in your spam filter, guys and gals. So if you don't see the email, check that spam folder, and while you're down there, make sure you whitelist all the emails from us here at School of Trade. That way you never have to worry about, right, missing another great video newsletter. How about questions, right? I know you guys got questions. I get a ton of emails, a ton of phone calls every day, right? I know you got questions. That's what the comment section is for. I would love you guys to post any questions you may have about the patterns, the charts, the analysis, or really any questions that you might have. I'm always hanging out down in the comment section below, so don't be afraid to drop those questions in the comment section below. And real quick, while you're down there dropping me some questions, if you tune in every evening on this video newsletter, hit that thumbs up button for me, because believe it or not, every time you hit the thumbs up button here on YouTube, YouTube helps to expose this video to other traders who haven't seen the newsletter yet. And I always appreciate you guys supporting this video newsletter every evening. So drop me a comment in the comment section, hit that thumbs up button while you're down there, and subscribe to our channel. That way you never miss any great content here from the School of Trade community. And don't forget too, if you have any questions that are too much for the comment section, I'm always here. You know, I realize that most websites are automated robots and chat widgets these days. You know, call me old school, but kids, I actually talk on the telephone. Believe it or not, that telephone rings and we pick up the phone, and we love talking to you guys. So don't be afraid to call the office, call that toll-free phone number, use that live support tool in the upper right-hand corner if you guys have any questions right along the way. For example, we get a lot of questions right at our office line every day about how to attend our trade room on a free pass or part of that free trading course, right? So don't forget, call that toll-free phone number if you got any questions along the way. but I'm taking up too much of your valuable time right now. Let's dig into the good stuff here today. Let's get this video going. First of all, let's start off with tomorrow's calendar. Now, we talked about this last night on the newsletter. We're going into, right, a holiday weekend, right? So the next couple days here are going to be go time. The next Wednesday and Thursday are really going to be really the two big days here this week, because we're going into, right, that holiday weekend. Now, keep in mind, markets are technically going to be moving on Monday, but it is a holiday. It is a Columbus Day holiday. It's a federal holiday in the U.S. Be very, very careful on Monday. We'll talk more about that here later on this week. But Friday's pretty much a half day because of that Monday holiday. That means tomorrow and Thursday, it's go time, right, in our trade room. And don't forget, guys, we're going to execute the entire strategy together with all of our clients every morning, right, Monday through Friday in that trade room, opening up at 8 o'clock Eastern time. What's on the schedule here for tomorrow? Tomorrow is Wednesday. It is the 9th day of the month of October. We've got three major news reports here for tomorrow. I've got, of course, the four major news reports tomorrow. I've got that JOLTS report at 10 o'clock Eastern time. Now, don't let that little green dot right there fool you. The JOLTS report at 10 o'clock combined with wholesale trade is usually going to be a powder keg for market volatility. I'll definitely be keeping my eyes on that JOLTS report tomorrow morning at 10 o'clock Eastern time. A little bit later on in the morning, we got oil report coming out. This is the weekly crude oil inventory report. It only applies to all you oil traders out there, right? So if you're an oiled guy like I am, right, or gal, I should say, right, the petroleum status report is definitely going to be on your radar here for tomorrow. Now, remember, this is the one time of the week that you've really got to kind of sit on hands, right, on this market. The market is usually pretty quiet after 10 a.m., and then we usually don't start seeing the dust settle until about 10:40 a.m. Eastern time, all right? So just be aware of that, right? The petroleum status report, it's only once a week, Wednesday mornings at 10:30 Eastern time. You want to think 10 o'clock, and then after 10, right, to 10:40. Now, hopefully I'm wrong on this, but usually things get pretty slow after 10 o'clock on oil. Again, this does not apply to any of the other markets, which means we'll definitely be shifting our focus tomorrow after 10 o'clock, right? And again, this all depends on the market looks, right? If it is still moving, we'll trade it. Right, we may get some nice response after that JOLTS report. We may get some good price action until about 10:15, and then things may slow down into that 10:30 news. You know, obviously, we never know exactly what's going to happen, but we know what typically happens. And typically on a Wednesday morning after 10 o'clock Eastern time, we'll start seeing traders start to ease off the gas pedal, no pun intended there, right, for the oil report tomorrow morning. Then usually by about 10:40, 10:45, right, give or take a few minutes here and there, we usually see the market start to calm down a little bit and get back to its normally scheduled price action. So I always recommend my clients be careful between that 10 o'clock and 10:40 block, right, on Wednesday mornings around that weekly inventory report. Then we get the big, potentially, what really might be the most important news event of tomorrow, right, is that Jerome Powell speech at 11 o'clock. Now, Jerome Powell, this is not the testimony. This is not, you know, this is not the stop the presses, everybody pay attention. This is not the semi-yearly testimony on Capitol Hill, which we saw a few months ago. This is he's basically the host of a roundtable discussion, right, with his gal Esther George, right, and a couple other Fed speakers. Now, the reason why this is important tomorrow is because, as I mentioned last night on the newsletter, we heard from our boy Jerome here this afternoon at 2:30, right? And he basically said, get ready for QE4. He basically said we're prepared, right, to load the guns here, right, and start basically injecting more capital into these markets. He basically came out and said that here this afternoon, and I'll bet tomorrow that we're going to see a lot of questions surrounding more clarity on that. Now, my biggest concern is we may get price action a little bit dicey leading up to it, right? If it's slow and choppy tomorrow, we know why. because everyone's going to be waiting to see kind of what he's saying. And then what that means is we might get our best opportunities, right, in the afternoon or after he's done speaking. So, you know, again, I never like to make any really predictions as far as what the price action will feel like tomorrow. But if we do see it slow and kind of sluggish and choppy tomorrow morning early, we know what they're waiting on. They're waiting on our buddy Jerome Powell to kind of clarify what he said here this afternoon at 2:30. And I would imagine, right, the good stuff will be coming, right, shortly after he starts speaking. Traders will latch on to what he says. And that might just be the best movement we see here of the day tomorrow in the wake, right, of what he says, right? And now we do have another one tomorrow, right? We do have that FOMC meeting minutes. But honestly, I don't think that's going to be as important as it usually is. I think he gave away I think he turned a lot of his cards up, so to speak, today, and I think we'll probably get a little more of an inside look at 11 o'clock. I just don't think the markets are going to have that many left unanswered questions by the time we get to 2 o'clock Eastern time. Maybe I'm wrong. I don't think so. I think we're going to see a lot of questions answered tomorrow in that 11 o'clock to probably 1 o'clock block there as he runs that round table. So as always, guys, there's potential for a lot of really big opportunities at the beginning of the session, 10 o'clock, right, into that 11 o'clock hour, and then we'll see how Jerome Powell likes to shake these things up for us tomorrow. And as always, tomorrow morning, 8 o'clock Eastern time, we'll be in our trade room, and we're going to do all of this together, right? We'll adapt to what the market feels like. If it's slow, we'll stay patient. If it's moving, right, we'll get on it, right, and make our money tomorrow together. So obviously every morning, 8 o'clock Eastern time. Tomorrow, big news, 10 o'clock, 10:30, 11. And again, I'm not expecting that FOMC meeting minutes to be too big of an impact tomorrow. But as always, right, I'll be sitting there front row seat to see what we get tomorrow morning. Let's jump into some charts here now, right? Got our schedule all ready here for tomorrow. Let's grab a look at the charts. I got my crude, got my S&P, my Nasdaq, my gold. Let's get this party started. Now, like I said in the introduction, a lot of what we're going to be doing here tonight is combining the momentum of the market with a range-bound plan, right? A range-bound plan. So let's talk briefly here about kind of how that works, right? First of all, anytime I have a trading range, let's put it this way. Anytime a market is range bound and trading sideways, right? Double tops, double bottoms, I know the market is what I call balanced. And that means that what goes up will probably come back down, right? And what goes down will probably come back up. Remember that word, right? Balanced. Because when a market is range bound, it's happy, right? It is happy as a pig in you know what, right? It's happy where it is. The buyers and sellers are content where they are. And it will usually take some sort of news or a political announcement or a closing bell, right, to change the opinion of that market, which results in a breakout, right? So trending markets, right? Trending markets are trying to get somewhere. Range-bound markets, they've already got where they're trying to go. So range-bound markets are balanced markets. Now, when you find a range, what you want to do is buy low, sell high, and use what I call the 2-try rule, right? And the 2-try rule really is kind of a piggyback off of a breakout pullback pattern. When I was a rookie, I learned, right, a pattern called a breakout pullback pattern, right? And of course, they try to tell us in all the books, right? You add a couple indicators down here, right? You read the order flow, right? And you can predict which of those breakout pullbacks are worth your time. Well, I will save you a couple years of struggling and tell you right now that breakouts and breakout pullbacks in liquid markets are historically proven time and time again to be a statistically unreliable setup. I'm not saying one or two of them won't work, right? There'll always be an exception to every rule, right? There's always a couple 120-degree days every year, right? But the average is right around 80 degrees, right? So we know that statistically, those breakout pullbacks are not very reliable. What is a lot more reliable, therefore, is waiting for a breakout pullback to fail and going back into, what was it called again? That balanced, right? That balanced market. So the idea is relatively simple. When I see a range, I know the market is balanced. It's happy right where it is, right? It likes the neighborhood it's living in. It's got a great house, a good job, right? It wants nothing more out of life than stay right inside that range. We see a breakout. We wait for the breakout pullback. We know statistically these are not very effective, right? And we sell back down in, right? We go down. We let the bears, right, try to get that breakout pullback, and we, guess what? We buy it back in, right? So that's the basics in a nutshell. Now from there, let's take this one step further and let's add a directional bias, okay? For example, on oil right now, it's a bear bias. Right? The market is bearish before we go into that range. Now with a bear bias, I still want to try to sell off that high by using that breakout pullback failure pattern, which again I call the one try, two try rule here, right? The two try rule. Yes, we can still use that failure pattern, right? But how about being a buyer down here? Can I do the same thing to buy back up? I mean, isn't a range a balanced market? It is, but we have to respect what? We've got to respect that bearish momentum. So when the market runs lower like this, right, with that bearish momentum, now what I want to do is I want to anticipate, right, that breakout pullback pattern, but I now need to think about the sellers are probably going to try twice on that pullback, right? They won't just give up on that first try. They'll try it a second try. And a lot of times that second try will actually be successful. Okay, and we'll talk about what a successful breakout looks like here in just a moment. The moral of the story is when I have a bear bias to it, I want to look for those sellers to try once, but instead of now trying to buy up into those stops now, right, what I look for is I look for them to try a second time here. And once I see them try twice, now I know the aggressive sellers are in, right? The conservative sellers are in. All those breakout pullback sellers, right, are now stuck. And if it runs back against them, that will slingshot now back up into that balanced trading range. How about a bull market? Same thing, right? If we have a bullish bias into a range, right? Like on gold here today, what is it? It's a balanced market. As we go, right? As we go lower, I look for, because we're so bullish, right? I look for those I look for that breakout pullback. I know historically those are not going to work very well, and I buy into the stop losses of those sellers. But how do we sell off that high though? Very different, right? Now we're selling against that momentum. So now you want to anticipate that momentum. Think one try for the bulls, two try for the bulls, and we can sell right back down into that trading range. Let's talk one more thing here. One more thing. We'll go back to the charts. I always hate to keep you guys off the charts here. What about a breakout? Right? What's a breakout of a range look like, right? How do we break free of a range? Now, this is irregardless of directional bias, but how do we break free of a range? We need a pattern that I call a 1, 2, 3 breakout. Now, we talked about this. Ranges are balanced, and even with a bunch of indicator confirming, right, range breakout pullbacks are still not very reliable. So how do you trade a breakout? You look for the breakout, right, what I call the 1, 2, 3 breakout. The 1, 2, 3 breakout is really, really simple. I want to see 1, strong move up, 2, pull back now to the moving average, and the buyers now have to show me, right, with strength coming off that moving average. Now, believe it or not, the pattern here is actually pretty easy. You're going to mark up that high, mark up that low, and buy that pullback off the low. At this point now, you could also say the sellers have tried once. The sellers have tried twice, right? There's that 2-try rule again that we mentioned earlier, right? That now is a great time with the bears now trying twice to buy into their stop losses. Meanwhile, you've got the proof you need. These buyers have control. It's not just, right? It's not just the buy side though, guys. It's also the sell side too, right? Balanced market, range-bound market. What we look for here, strong move down. Got to be a strong move out. Moving average comes over. Bears come in. They bam, right? They jump off that moving average. That now tells me 1, 2, 3 breakout. I'm going to mark up that low, mark up that high, and look for my sell right off of that high. And again, think of it this way. The buyers have tried once. The buyers have tried twice. You now have the 2-try rule in a slightly different way. Now, I could go even further down the rabbit hole with you on this, but that is the basic idea of a range, what it means to be a range, right? A balanced range-bound market, right? Imagine that. Imagine oil right now with its feet kicked up on the couch, right? A beer in hand, watching some Netflix. It's hanging out, right? It loves where it is right now. It's comfortable right around this trading range. We got a bear bias, though, to it, don't we? So how do I sell? I sell by using that breakout, pullback, failure off the high. Right? How do I buy the breakout higher? I go 1, 2, 3. Now this is obviously not drawn to scale, right? This could be 1, 2, 3 like that too. I mark up that high, mark up that low now, right? Draw the trend line off those highs because that's the only way you're going to get that trend line. Right? That's going to give you now that what I call a hidden channel or a negative channel, right? And now you know where that breakout looks like going back up to retest what? Probably going to be up around that 54.06 level right up there overhead, right? So that's something to keep your eyes on there for the sell side here for tomorrow. What about the buy side here below the range, right? How do we go down? How do we buy it? First of all, I got this trend line coming down. Right? That trend line right there, right? Got that trend line there. Got that trend line there, right? Would love to get that breakout, pullback, failure back down into that trading range. Or if we go lower here, what do? Right? Let it go lower. Let's get this thing off of here. Right? Let it go lower. Don't try to trade it lower, right? Remember, range-bound markets, balanced markets, right? Every time you see a flat moving average on that chart, think of it like a bed, right? The market's just kind of hanging out, right? Market's just, right? It's hanging out right now. It's loving life, right? Laying on down, feet kicked up, right? That guy looks pretty, right? Looks pretty relaxed right now. Again, we're balanced here. So we go back down, right? Break out of that range. You're going to definitely see some breakout pullbacks, right, off that moving average. Once you see it, right, we're buying into that failure. Now, if we get lucky, we'll get something like this, right, where you go down. Now, count them out, right? You get 1, you get 2, and then whoop, right back up into that trading range. Bear move down, 1, 2, back into that range. Okay, so we go up, 1 try, 2 try, it's a breakout pullback failure. We go down, right? It's 1, it's 2, and it's back up again. Why? Because of momentum, right? Now, the most important thing though is you gotta stay out of that middle, right? So don't even waste your time with anything inside this area. Really, anything inside this area is going to be considered low reliability. Why is it lower reliability when you're near that range? Because traders can't get a good risk-reward ratio. See, if I can go up into that battle zone, get a breakout pullback failure, right, I can risk relatively small, right, compared to, right, my reward. If I do that same pattern, right, if I take that same pattern right here now, I've got all the risk and I've got a lot less reward. Right? So risk reward is much more attractive when we're outside the range. Okay? So keep that in mind, right? I want to stay out of that range. I want to get up, 1 try, 2 try, back down in. I want to get down. Again, we're bearish. 1 try, 2 try, a slight variation, right, of that 2 try. By the way, I call this a nested variation of that 2-try rule, right? As opposed to just your typical major 2-try, right, off of that high. Good example here, right, of a nested pattern coming off of that low. Good example here of a major 2-try above that high, right? Major 2-try above the high, nested 2-try below that low. And again, we know what breakouts look like, right? So 1, 2, 3 breakout, mark that low, mark that high, right? And we're selling off of that high. So the 2-try rule, with a little twist, right, based on the momentum that we're seeing in the market. And of course, we're keeping an eye out for those 1, 2, 3 breakouts. Now, right about now, I'll bet you want to see some real examples of how the 2-try rule works, the nested 2-tries, the 1, 2, 3 breakouts. I got a special treat for you. In the upper right-hand corner, what I'll do is I'll put a link up there for our free trading course here at School of Trade. As part of that free course, you'll see hundreds, if not multiple hundreds, right, of examples of how we use the 2-try rule. The 2-try rule is littered throughout my entire trading strategy because it emphasizes the market psychology. And because the markets are built and traded by human beings, right, we do expect those human beings, who are creatures of habits, they try once, they try twice. Bottom line is, check out that free course in the upper right-hand corner. If you're on the blog right now, I'll put a big red button for you guys to hit. If you're on the blog, it's Sideways Markets. But if you're on YouTube right now, though, they'll put a link in the upper right-hand corner. Grab that free trading course, right? You'll love that free course, right? And make sure you follow the instructions to register for that free pass for our trade room. Let's keep going, though. Let's keep going. Got the oil all set to go here for tomorrow. How about some S&P? So the S&P at first glance does not look like your typical range-bound market unless, of course, you traded this market today, right? If you were just looking at this chart right now, you would say, no, man, this is not a range. It is, though. If you actually traded the S&P today, right, you know that we spent the majority of our time today, right, all chopped up inside that range today. Then this afternoon, they went up and slammed it right back down in. And, of course, right, breakout, pullback, fails, back down into that trading range. So you know the plan already, right? Oh, sorry, wrong button there. It is a bear bias, right? It is a bear momentum. There's my range right there. And again, looking at it in hindsight, you might not notice that, right? But if you were trading it in real time, right, this morning, we were in the trade room, right, we definitely saw how chopped up, right, those E-minis were right here for this morning. So knowing that this market settled in today around that trading range, right, now we know we want to go up, breakout, pullback fails, right, and back down into that trading range. What else do? We go down and we look for, what was the name again? It's called a nested failure, right? 1 try, 2 try, back up in. Just remember, stay out of that no trade zone, right? Stay out of that no trade zone. So we kind of have a good idea now what to expect, right? We go up, 1 try, 2 try, breakout, pullback. Now maybe we get lucky, right? Maybe we go up here, nice big push higher here. The moving average comes over. The buyer's going to buy the pullback, and we get a combination. Now, combinations are all about location, right? So maybe we get a combo, a failure, right? A 2-try failure into a pullback. Now, obviously, to get this combination set up, you've got to have enough space for it, right? You don't want to take that pullback pattern back inside that range, right? So if we only go up 1 and 2 and go back into that range now, that pullback's not going to be a very good spot for it, is it? Make sense? Right? We can definitely take the failure, but the pullback's probably not going to be in the best spot because you're right inside that range right now. So that's why I always say the combination, right? The failure into that pullback combination pattern, literally that's how it looks, right? It'll go up. The buyers, of course, will try to buy off the pullback. They'll fail. Moving average comes over, and we're trying to sell now right into that moving average, right? Hopefully that makes sense. Buying low, selling high. In this case, selling high here. How do we buy low? Strong move down, obviously. Bears have the edge. 1 try for the bears, 2 try for the bears, and then up we go, back up into that trading range. Now, how about a breakout right now? Now, I try to keep my opinions about stuff out of my trading because honestly, it doesn't matter. But from what I said earlier, right, I mentioned earlier that Jerome Powell, the Fed chair here in the United States, he basically, he didn't say it, but he basically said, we're preparing now for QE4, right? Quantitative easing round 4. And the market went down because of this. Now remember, right? Adding more cash to the market, right? Adding more cash to the economy, giving consumers more bullets to spend at the shopping mall. Does that sound bad for the S&P? It doesn't. So I was expecting to see, when he talked this afternoon, I was expecting to see a much more bullish response here. So we may be in store here for an okie doke tomorrow, where they sold it, but in all reality, we get that big move the following day. Right now, again, we're way too early to predict that, and at this point, it's only an observation, right? I have no evidence because you can see the bears obviously took this thing at 2 o'clock, so we know the bears have it. But I would not be surprised tomorrow if we see a monster rally tomorrow and Thursday at some point this week, as the market finally realizes, wait a second, more stimulus. Wait, that's good for this market, and people will start buying it. So I wonder why they're so bearish right now. Again, you can't take this and say, okay, I should buy this. Joe said to buy it. I'm not saying to buy it. I'm saying buy it right now with the right pattern, which would be, of course, the nested failure off that low. What would a reversal look like, right? That 1, 2, 3 reversal. Right now, of course, at this point now, right, you got to get back above that range, hold that pullback, and go. Right, so keep in mind on that. Right, 1, 2, 3 reversal. We'll mark up that high, or should I say 1, 2, 3 breakout. Mark up that high. Right, find that channel high, bring it down to that low, and then we can buy right off the low of that hidden channel. Right, where's our target? Target's back up to retest 29.50. But in all reality, right, if we can get to 29.50, we'll probably get all the way back up there to the beginning of the week highs there at that 29.60 area. That, again, right now is a bit of a pipe dream there for those bulls. But, hey, we'll be aware, we'll know the why, right, if we do get what looks to be a sharp change here, right, in Asia. So keep your eyes open. Now, how about a breakdown? 1, 2, 3 breakdown, right? Strong move down, hold the pullback, right? Keep going, sell off the top of that channel. You'll notice I'm not saying just try the breakout. Let's see how it works, because most breakouts are going to fail, right? Let these buyers try once. Let the buyers try twice. Once they're done, right, trying to send this back up in, then we can sell into their stops. And where's our target there? All the way back down now to that prior low, 28.55 and change, right, will now be our next objective, right, down at those 28.55 and change down there. So again, am I saying sell this right now? No, but I will say sell this once we get the proper 1, 2, 3 breakout of this trading range. So very interesting tomorrow, right? Interesting tomorrow. And again, be careful tomorrow. If we do chop around here in the middle, we got Powell at 11 o'clock. The markets might be waiting to see what he says in follow-up from this afternoon. Don't force it. Wait for the best setups tomorrow. And again, don't forget, we'll be in our trade room tomorrow morning, making sure you stick to your rules. Don't break those rules. It's one of the biggest reasons why our clients are so successful, is because I hold them accountable, right? Every morning, I always encourage my clients, send me your charts, send me your screenshots, let me give you feedback, and I try to hold my clients accountable every step of the process because, you know, as human beings, we're just not built to be good traders. As human beings, we're emotional, we're impulsive, we don't think like traders. Traders think in terms of probabilities, they think in terms of risk-reward ratios, they stay patient, right? Human beings are the opposite of what a trader needs to be. That's why most professionals will tell you that traders are not born, they are developed. I'm sure there are a couple weirdos out there that were born good traders, right? But I'll tell you right now, if you're born a good trader, right, you're probably not good at much else, right? Because our society doesn't really reward people, right, who don't say anything, stay focused, all right. That's not a very, probably not a very happy life for your living if you're a very, very good trader out the womb. So we try to develop those skills, right, of patience and discipline, thinking in terms of probabilities, right, and risk-reward ratios, rather than being impulsive, emotional, right, and always thinking the positive side, right? It's human nature to think positively, and we can't do that as a trader, right? Thinking positively is going to get you in a negative position in your account. Anyways, let's keep going here. Let's keep going. And I did not mean that personally, by the way, right? If you happen to be that 1 in a million people out there, out the womb, right? You were doing risk-reward ratio calculations out there. Please do not unload on me in the comments section. Well, if you want to, feel free to, right? I deserve it on that one. But bottom line is, let's get back to the video here. Looking at the Nasdaq, right? Nasdaq, of course, running lower here. Right? Running lower there into, again, if you looked at this chart, just kind of glanced at it, you would say, oh no, it's a trend, a double bottom, and we're probably going to go back up here. Now, we probably will go back up here, but not for that reason, right? Because again, we spent most of our time here, right, chopping around this morning after the opening drive in that range, right? We knew that range was there ever since about 10:15, 10:30 this morning. We saw the market go up, breakout, pull back, fails, and back down into that range. As we go lower now, we know the market's bearish. Looking for that, you got it, nested, 1 try, 2 try, back up into that trading range, right? 1 try, 2 try, back up into that range. Or 1, 2, 3, break down, mark the low, mark the high, right? Let the buyers try once to go back in, try twice to go back in, then we're selling right into their failure off the top of that hidden channel. Where's my target? Whoa, that's a big target down there. A little bit more dramatic than the S&P. This Nasdaq certainly has quite a big opportunity here, right? At the very least, right, to go back down to that big round number at 7,500, right? That's a pretty big psychological level there. That 74, 72 though is definitely on our radar here for tomorrow. As we go higher here, right? As we go higher, I want to go up, right? Again, maybe we get lucky and get that breakout, pullback, failure into pullback pattern, right? Maybe we get lucky on this. We go up, right? We get that failure into pullback combination. Again, just make sure you don't force that pullback entry. The failure pattern is usually pretty good, right? It's that pullback that is always the one that, you know, is tricky, right? Good example back here. There's your failure into your pullback combination. Right? That one, just enough space, right? But if that would have happened, a little bit lower here, that wouldn't have been a very easy trade to take right there, right? Makes sense? So you want to make sure you get in before we get back down right into that trading range. Again, I'm not sure why the market was so bearish after that announcement this afternoon, right? I would expect, again, this is not tradable, actionable information. This is just my initial reaction to what I heard most of the markets do was I would imagine at some point here we should get a rally here, right? Once these markets realize what happened here today. Maybe tomorrow we'll hear more from Powell and he'll clarify what he meant. Anyways, a bull market will be a strong move up, right? Moving average comes over, hold the pullback, and jump off the moving average. Mark that high, mark that low. We're buying off of that low again, right? Where's our target? Target's probably going to be up around that 7,800, right? That big round number, right? 7,800 as we go up top there. So Nasdaq's pretty simple. Right? Nasdaq is a very narrow range here. So again, be careful tomorrow morning if you find yourself stuck inside that trading range. Watch those breakouts, but don't predict the breakouts. Right? Watch those breakouts, but don't predict the breakouts. Last but not least here is the yellow metal here on gold tonight, right? And guys, don't forget, I've talked a lot about the 2 tries and the ranges, right? I've got hundreds of examples of that 2 try rule for you, along with all of our other different types of setups. I've got 4 favorite setups as part of my 3-step strategy. You'll learn all of that by grabbing that free course in the upper right-hand corner. Or if you're on the blog here tonight, right, grab that big red button below me here tonight on the trading blog at Sideways Markets. What do we have here now? Same story, slightly different direction, right? We're obviously here a bull market right now into a trading range, right? The range was pretty much solidified as of about 10:45, right? 10:30 here this morning. Bull market goes up. What happens, right? We breakout, pullback fails, back up into that range. Obviously, this got pretty messed up because of the announcement from Jerome Powell. Gold will always be the most volatile anytime Jerome Powell speaks. So keep it in mind for tomorrow morning, right? We notice though, right, they get that breakout, pullback failure. As we go higher, we look for that nested, right? Now we're bullish here now. How do you sell off the high? Very patiently, one try for the bulls, two try for the bulls, right, and run back down. I've got that trend line there overhead. I'd love to use that trend line as a key level of resistance. But again, if you want to sell this market right now, you've got to do it the reliable way. Don't just try to think positive and say, well, hopefully it'll work, right? You can wish and hope all day long, but usually positive thinking is probably going to put you in the red here when it comes to your trading. Your trading needs to be rule-based and based on probabilities, risk-reward ratio, all the stuff that we teach here at School of Trade. Now, what's a breakout look like? What's a breakout look like? Well, you'll notice here I've got that measured move, right? And that measured move puts us right up around those highs here from earlier on this month. That 1526 up there has a big old bullseye on it. I would imagine this market turns a lot more bullish tomorrow morning because, again, if you talk about stimulus, right, QE4 from Jerome Powell, if Jerome Powell says we're going to print more money, what happens to the value of each of those dollars? They go down. When the US dollar goes down, by definition now, the gold, the euro, any other currency, right? Whether it be a precious metal like gold and silver, or it be something like the euro, the CAD, right, the Swissy, whatever, by default now that will go higher. So again, when I hear stimulus, when I hear about we are ready to stimulate the market more, that tells me right away here, expect a weak dollar, expect a strong, again, equity markets, because more money is better for everything, right? Again, I realize it's short term, right? I'm not talking reality here, guys. I'm talking about momentum. I'm talking about psychology, right? I'm not talking about the long-term healthy benefits of quantitative easing. I'm talking about in the short term, right? They put more money in the pockets of everybody going to the shopping malls this weekend, right? Retail sales will go up, home sales will go up, auto sales will go up. That'll be a boon for, right, the equities. What it will also do is, right, it'll send gold higher, right? Because now as they print more money, that paper money becomes less valuable, right, as compared to a scarce resource like gold, right? Jerome Powell can't print more gold. Well, who knows, right? With these 3D printers these days, maybe they can someday soon, right? But as of right now, in 2019, you can't make more gold, right? And good God, if that day ever comes, that should be an interesting day. I'm sure it will be. But as of right now, though, that gold becomes more precious, more scarce, more rare, and we'll likely see this market, right, going higher. Right now, it's a hunch. We know we're already bullish. So what do we need here for a long side trade here on the gold? Again, I can buy that breakout pullback failure below the low, or there's two patterns now I can look for here on gold. One, of course, is that 1, 2, 3 breakout. Mark that high, mark that low, right? And buy that, again, 1, 2, 3 breakout into hidden channel pullback up to that measured move. Another option, though, would be a more aggressive pattern, which I call a 2-try breakout, right? 2-try breakout. This one's a little more aggressive. We'll look for a strong spike up. Now, that strong spike up will typically tell buyers in the market, take some profit. And once those buyers come in and take some profit, sellers will come in and they'll try to sell right above that high, right? If you were to read a book on scaling into a market, right, that's exactly what they tell you in those books, right, is wait for that first pullback, and then once those, again, this first pullback will be buyers taking profit. The second one now are sellers getting in, selling short, right? Trying to go back into that range. Basically calling the bluff of these buyers. Now we know where stops are. right? Now we know two things really. Now we know where the seller's stop losses are, and now we know also if I get a nice strong green candle here, all of the buyers who got out early, guess what? They're going to jump back in again. So we have the sellers who become buyers, they're getting stopped out, and we have the buyers who are chasing after it now because of that fear of missing out, right? That's why you'll hear me call this one a FOMO breakout. Right? Or the official name for it is a 2-try breakout pattern. First step is strong move up, profit taking for the buyers, short sellers come in, buying into that. Again, 1 try, 2 try. I told you this 2-try rule is littered throughout my entire trading strategy. You can learn more and all the details, right, of the strategy inside that free trading course. Grab that red button below the video tonight on the trading blog, right, to learn more on that. Again, stay out of that middle 1 try, 2 try, buy back up, or 1, 2, 3 breakdown. I'm not only trading long here. If we break the downside, right, you can't be, as they say, married to a direction, right? Especially if your ego's in play. Okay, this is one of the hard parts about trading. You know, you don't want to let the fact that you were wrong make you miss that trade, right? Let's say you put together a whole spiel about why the market's going higher and how you want to buy it and where you want to buy it, and all of a sudden it rolls over and plays dead. Well, get over yourself, right? Now it's time to make some money go in the opposite direction. Okay, you got to get used. In fact, that is one of the hardest parts of trading. You got to be okay with being wrong. You can't get all butthurt, right, about the fact that you were wrong. Because if you're wrong and you wait, right, you're probably going to miss the chance to be right. Right? So don't get upset if you're wrong about it. If you're wrong about it, who cares, right? No harm done. Let's get back at it, find the new direction, and plan accordingly from there. Okay, target back down to those lows, right, as we go lower. So guys, don't forget 2 possible breakout patterns here on gold. I got my eyes on you up there at 1529 or 1525.9. And don't forget, I've covered a lot in tonight's video, but we are going to do all of this together every morning at the opening bell. Guys, come out and join me every morning, 8 o'clock Eastern time in our trade room. If you're on YouTube right now, I'll put all the links in the description of that YouTube video. Again, I'll also put that button right in the upper right-hand corner here of the video, right? Upper right-hand corner of that video, right? Also, don't forget, you can learn more about membership on our website by grabbing the information from our advanced classes. Our advanced classes are all inclusive. They include a Harvard grade education in the financial markets, specifically tailored for price action trading in the futures markets. And don't forget right now, if you're on the blog at sidewaysmarkets.com, I'll put a big button to register below the video tonight on the trading blog as well. So if you're on YouTube, in the description, if you're on the blog at Sideways Markets, just look right below the video tonight. And as always, if membership is not quite your time right now, I would still love to have you as part of our free trial. Our free trial includes the free trading course, hundreds of hours of examples of how we apply that strategy to our favorite markets. It also includes that free pass. Come out and join us in our trade room as a guest for a couple days. If you need more help, right, don't forget, right below my ugly mug tonight, that live support tool, right, call me in the office if you guys have any questions. Use that live support tool below me, right? All the information is there on that video. And keep in touch, right? Keep in touch. There's no questions too big or too small. Drop the questions in the comments section below. Hit that thumbs up button while you're down there. Subscribe to our channel, join the mailing list, and don't forget to come out and see us again in the next edition of our nightly newsletter. Every evening, we'll come back and see you guys next time. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.